Hello everybody, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. This is another in my continuing series on YouTube subscriber requests. I've been asked several times to look at Micron technology. So I want to start by saying I know very little about this company, so I'm just going to give you what I see on the FastGraphs from a standpoint of fundamentals. And the first thing that strikes me, if you look at the operating earnings line here, you can see that the company is extremely cyclical. Years where the company had negative earnings growth, it's very, very hard to predict. Now, more recently, in 2016 and 17, the company's had just enormous growth. So when I put monthly closing prices on this graph, you can see that there is a correlation between price and earnings. But the big problem with this company is it's very, very hard to forecast. Now, the company trades at a PE under 5. It doesn't pay a dividend. It has a $62 billion market cap and a BB+ rating by Standard & Poor's and 32% debt to capital. But what really alarms me about this company, it's really hard to analyze. Let's go ahead and look at forecasts here for a minute. When I'm looking at operating earnings, we're expecting a 136% increase for this fiscal year, which ends on 8/31/2018. But then I want you to notice that there are a lot of analysts that are forecasting negative earnings growth for the next couple of years. The 3 to 5 year trend line growth, however, is very, very high. But the real problem with this company is when you look at the analyst scorecard and actually evaluate how accurate the analysts have been, they've actually missed estimates as much or more than they have met or beat estimates on the 1 year forward. They also missed estimates on the 2 year forward. Let's go back to looking at some other factors about this company that really trouble me. So I'm going to go into the financial underlying numbers here, and I'm going to go into the percentage graph, and the first thing I want to look at are gross and net profit margins. I'm going to shorten the time frame here because I don't need to. You can see during the recession they actually had negative gross margins. You can see the gross margin is the red bar here. Their gross and net margins are all over the place, and that's been very consistent with this company. When you look at return on equity, you see a very similar picture. The company, generates some very high returns on equity, followed by some losses or negative returns on equity. So a very, very difficult company to analyze, in my opinion, simply because of the cyclical nature of the business. Now, what the stock has going for it right now is that it's very cheap. So if you look at it on a valuation basis, it's only trading about 5 times earnings. But let's look at EBITDA, which is kind of a weak form of cash flow, in my opinion. Let's look at EBITDA and see how the company's priced relative to EBITDA. I'm going to shorten this to a 15-year graph, and I do want you to notice that the price seems to track EBITDA very nicely. And we've had this great run-up in the stock price as we've come into these 2 really great years. But this out here concerns me. I don't know, how these analysts are able to forecast that, but they certainly don't see a lot going on in the future. Now, another thing that kind of bothers me about this company, let's look at common shares outstanding for a moment. This company has been issuing shares in this market when the stock is, theoretically cheap, which is not necessarily a bad thing, but it's what they do with that money that really matters. Now, what little bit I do know about this company, and I already admitted I'm not knowing very much, it's really heavily involved in memory storage, and memory storage is pretty much a commodity in the technology world. So that probably explains why their numbers have been so erratic over time. So I don't know, for me, it's not the kind of company I'd be interested in because I don't know that I'd ever be able to really figure out what I could expect from the company. The multiple of earnings is very, very cheap, but the consistency of the earnings and the cyclicality of those earnings is something investors should be really cognizant of. So anyway, this is my take strictly by the numbers on Micron technology, looking at it through the lens of FastGraphs. I know very little about the company, so I'm really reticent to say much more than I have, other than the cyclical nature of this company is not something that should be ignored. Anyway, this has been Chuck Carnevale saying thanks for listening. If you feel that these FastGraphs analysis are useful to you, you might want to take a closer look at our company. You can call us at 813-960-9600 or log on to www.fastgraphs.com and take one of our 14-day free trials if you'd like. Anyway, thanks again for listening.